Hi everyone, Brandon and Lana here. Welcome back to our channel. Well, we've been keeping you current on what's going on with the market, and it is a new year, 2022. And after almost 2 years of double-digit increase in equity, most experts thought that home appreciation prices will gonna decelerate or maybe go at a slower pace at the last quarter of 2021. Is that the case? What's gonna happen with the home prices, Brendan?
Well, so let's start with where were we last year to basically get a better picture of where we're going this year. And it all has to do with supply and demand. As you know, with the less supply you have, the higher the demand. Of course, pricing is going to be an issue. One of the big things that hit us last year is we had 50% less inventory than the previous year. That was substantial, especially knowing, coming off of a coronavirus year. That was the first year we had dealt with COVID the previous year. And there was a bunch of pent up demand as well as obviously lifestyle changes. That was the first thing that happened. So essentially half the inventory and of course, great interest rates. That was another big thing that occurred. So moving forward, understand that in January of last year, we were already in double digits. We had a 10% year-over-year increase. By May, it had hit a little over 15%. And then by June and through until November, we don't have December's data yet, but through that time, we saw almost an 18% increase from year over year. And although it did start to plateau towards the end, which we expected, of course, seasonally it should start to plateau a little, the demand from buyers was still substantial, still pent up. People understanding that we were going to be facing a couple of other challenges this year as far as home prices go, and of course with the interest rates. So that's kind of where we went first.
All right, so a lot of people waited for the bubble to burst. A lot of you out there thought that the crash is coming, the foreclosure is gonna show up, so that Chicken Little, I guess, about the industry. So, however, it did not happen. So why didn't we see decrease as much as everybody anticipated?
So the deceleration that we expected was based on inflation. We were expecting that inflation was going to impact us. Of course, we didn't see the reduction in interest rates, or we didn't see the increase in interest rates as much as we anticipated. Of course, that's looming this year. And this year, the banks are already out and coming out with higher numbers and so forth. But there were three main factors that occurred last year that are going to carry into this year. The first one is foreclosures. We have seen substantially less foreclosures. In fact, in the last 2 years, we've seen about 422,000 less foreclosures than you would anticipate. In 2017, there were 314 foreclosures. Fast forward to 2021 through Q3, you only saw a little over 29,000 foreclosures. That is a substantial difference in the amount of foreclosure inventory. That right there is a huge thing.
And everybody expected foreclosure because of forbearance, right?
Right, they expect it, and guys, it's not coming. It's not coming. I mean, even if you have that, I'm sure you guys saw that little blip at the end of December with Zillow, after Zillow had their big buyout, and then they had to shed off all their inventory. Guys, we blinked and that inventory was gone. That's really what's going to potentially happen with the forbearance side of things as we come to an end. So don't expect that to be a major factor in it. The next problem is the construction disruption. So supply of materials, lack of labor, all those things were substantial as far as slowing down construction. Realistically, they shot themselves in the foot, but that's a whole other series. They had tried to play the game a little early and weren't anticipating coronavirus, and as a result, now we have backlog of supply and demand for the new build side of it. And then the third side of it, would be, of course, COVID. Big thing there is as we all felt that we were getting back on track with life, things were moving along just nicely, and we started seeing deceleration in cases and so forth. Last year, towards the end of the year, things took a turn, especially with Omicron, even though not as severe strain as it looks. Still, people were testing positive, which put a freeze on everything. So at this point, the lack of supply is also attributed to the fact that there have been a lot of people that maybe wanted to sell or maybe wanted to buy also. And where that kind of disconnect happens is the serious buyers were out there making their moves, consuming the inventory. Where on the buyer's side or on the seller's side, the inventory is just not there. And so, unfortunately, I think that the lack of inventory is going to be an issue. But I also think that we're going to see better numbers coming up here, where we will start to see a deceleration. Now, don't get this wrong. Please hear me out, because this is where everyone gets confused. A deceleration doesn't mean the market's going down. Understand that a deceleration in the year over year of equity, yes, it's still lower, but it's still increasing. It's still increasing by double digits. Factored in with expected higher interest rates this year. For sellers, now is the time to go. For me, in my opinion, we have some of our best sales, and we blew the price point away still to today. So expect for sellers, now may be the best time to sell. For buyers, a really good time to buy also, just because you won't have that heat wave of competition that's looming here in the next few months.
Well, yes, and also for the buyers, in my opinion, because everybody's waiting to, again, still market to crash and probably get the lower prices. Market is still going up, and if you're buying within the first quarter of the 2022, there is a very good chance you will have an increase in equity by the end of the year. So it's almost like investing in the stock knowingly that it's going to go up. You have an insider information here with what we're giving you guys right now. So anything else that we want to add to already useful information?
I could keep going.
Well, this is it. This is it for the video. Again, a lot of useful information, a lot of insider information. We don't have a crystal ball, but we have a lot of experience in the market, and we can see ahead at least for the next quarter. And this is what we're presenting to you guys. Thank you for sticking around. Don't forget to share if you know anyone who will benefit from this video. Visit our website, brandonandlana.com, to learn more about us and our team. We will have a lot of articles about what we talked about in the comments below, if in case you want to go deeper into what we kind of presented. But for now, this is it. Thank you for sticking around, and we'll look forward to any questions. Till next time.
Bye. We blew believe me, we blew some of these neighborhoods.
Almost 2 years of doubling.
Thumbnail next.
Can't do that in public.